Hey everyone. I'm looking at Rocket. We've done, actually, I'm not. I'm looking at some other things I was looking at, which is, so today, the 10th, first red day. It's not even red day because we haven't closed and we're barely red. The S&P is almost flat, so I won't call it a red day, but I'm getting messages, panic messages. What's the headline? We can't even tolerate one red day. And it's not even a red day, and also people are looking which knives to catch. There are many. I got a lot of alerts today. Yesterday, all the alerts were breakouts. Today, all the alerts were, hey, start looking for a credit put spread, bullish put spread to start selling. And among the names was Amazon, Nike, Akamai. So you can see at different levels, Akamai, at different levels of despair. Akamai might make the most sense from that perspective, but not saying anything about the company itself. Um, Tesla, Tesla for sure is a candidate. And so I wanted to catch something like a blend of both worlds. So if I'm somewhat bearish in my portfolio, or if I'm comfortable with my longs, and I can add another long. So there's another name that is not doing well yet, is Rocket. I've shared it before to another group. You may have seen it. It was a while back. It paid really quickly and then gave it back on the call side. The credit put spreads and the credit puts side and the sold puts worked out well. So I shared three ways to do it. One's to buy calls. Maybe I shared a debit call spread. I don't know if I did that a while back. And one to sell puts or put spreads. All paid. The calls, if I held on to them, they're lower now because it had a pop and a drop, right? So the level that got us the pop, I kept highlighted as resistance. Now, it's falling into support. I'm not going to spend time talking about the macro. I've beat it to death. I'm worried. It's falling into support. It's not a hard line in the sand. It's a good rejection of the low today. That candle, this is a daily chart. And this giant candle tells me that we're near. So what I want to do is try to swing trade up. And this is just my rendition of what could happen. It is in the zone where it's active. This is what the orange line is for. It's the point of control for the volume profile. So it should be sticky. So on the way down, it should be a soft. And earnings are coming in a couple weeks. Maybe if I'm lucky, this bursts into the earnings and then I can get out and not have to worry about the earnings because they are messy, or take out some off the table. So ideally, I want to see it go up. Do I want to ride it all the way down? No. So I will stop myself out at X dollars. Do you hear that? I will stop myself out if I'm wrong. If it makes a lower low, I don't want to ride it down. I will get out. It's a trade that didn't work. It's a swing trade. So if I like the stock long term, I can buy shares. If I like the stock long term, I can buy calls way out in time. I chose March 22 because I think it'll happen. And if it happens, I want it to happen quickly. They are about $2, a little under the cost. That's the maximum I can lose. So if I buy one contract, I'm risking $190, whatever it is, $200. And if it rallies, I'll look at the numbers and I'll show you what it could become. Alternatively, I can buy a call spread to lower that entry cost, or completely flip it where I don't even need a rally to win. I can sell puts or put spreads. I wouldn't sell them anywhere it's going to have to be around 20. To get any premium, because I don't want to sell them through the earnings. I want to sell them before the earnings. So I want to sell them for next week's contract. That's the only chance I have. So let's go into the options chain for Rocket. So Rocket, I believe that's Quicken Loans, right? At least the same guy. So on the upside, that's March. It has 37 days. 22 is $1.90 something right there. I could buy the 21. It's at the current price. According to this, it could move $4 up or down. So if it moves up $4, then I'm in the money right away and I'm good. So the $2 can turn into 260, 334. Depends on how far up it goes. Price. I'm long here. I wanted to go up fast. I don't want to buy any of these cheaper ones because then I have to not only guess direction, but I also have to guess how big the move is going to be. So I don't want to mess with it. I want to put a tight stop so I get long close with a tight stop. 37 days is not a lot of time, but if I go out to June to give myself time, now we're talking bigger bucks. 22 is almost double. So now makes it a conviction long, which I don't mind, but I don't love. So in this case, I would probably sell one of these to get long at 15 or 16. So that's the alternative way of doing this. I'll sell these, and if a rally comes, they'll fall in value, and then I can buy them back for less. So getting along without needing a rally. I don't want to sell March puts because I don't get enough juice for me to take the risk. I'd rather risk $2 up front and take off the partial loss if it doesn't go my way. I don't want to get roped into an investment. This is a trade. So my choice in this case, which is rare, would be to buy the call and stop out. Again, buy the call and stop out. The earnings come inside this week right here. That's why the implied volatility is almost 80. I don't want to sell anything in here. I could buy something in here, like the 22 is only $1, but I don't want it to be that short period of time. If I go to next week, the implied volatility drops a little bit. VIX is high today, so everything is more expensive, and everything gets really cheap, but that's really a lottery ticket. So buying, I'll buy March 22 with a tight stop. Selling, I don't want to sell. I would sell the 20 here, one of these, like a credit put spread at 20.50 or 20. So, collect 12 cents and risk 38 cents on 10 notes. So I would collect about $120 and risk $380. Also not really attractive for me. So I'm going to skip personally to selling. Okay, that's it. As far as fundamentals are concerned, I'm not sure. They're probably too new to make sense of it, but it is a business, and mortgage refinancing is here to stay because of the Fed. It's everybody wants to refi and cash out, so they should be able to do well. Total revenue, whoa, okay, so 2019 1.7254. These are quarters. It's a legitimate business. Wow. Okay, so I'm more comfortable now. I've never looked at this before. So price to no stats here. So viable business, no doubt. Comes from good pedigree. The guy that started Quicken Loan, I believe, involved. And so I'm okay with this. Nick signing out.